Hello and welcome to Stocks Advisor channel. In today's episode, we will talk about Advanced Micro Devices Incorporated, traded at Nasdaq, ticker name AMD. Well, AMD today finished with minus 3.12% at 79.06. And the most important part of it is that it's doing this red candle after the previous white candle. So it's actually white-red combination, and to be more precise, it's declined secondary bounce, because if you look here carefully, even the previous days of trade, we saw that we were volatiling between moving averages 20 and 50. So we had the nice move up, then was followed by let's look at the magnification, by decline, three red lines, and then after having yesterday the white one, there was a hope that it will continue further. But instead of this, we had a white-red, meaning that this zigzagging upwards is cancelled, confirming moving average 50, the blue line, working as a very strong resist level, which was also confirmed by a beginning of April, around 8 and 9 of April. So with this all being said, we now know that most probably we are going to decline further according to this technical situation. And to understand why is this so, we really need to look at the bigger scale. You can see here that it's quite expected, because we are already in general declining from those levels, and you see there is a clear, let's say, decline pattern for strong resist line formed here. We can actually make it red and call it R1. So this is very strong resist line formed, and this line will define for a coming period the levels of really resistivity. And this is in general what you see is a candle, is a declining pattern, and it's kind of zigzagging decline, because schematically, if you would like to draw it, it's something like this. We had decline, we had a small rebounds, and now we are going to decline further, and it could be even, let's say, more faster decline. So something like this we are going to form. And if you would like to see it on the pattern itself, on the chart itself, then you could just look through here. So this is the first channel decline. Actually, it was slightly, you can say, pierced a few times, but then recovered. Then this was the upwards move, which was kind of semi-confirmed, semi-declined. And and then actually, so this is the upwards move, and then we are now about to start the second line of declining, because actually the new channel of declining, and this might be a bit, let's say, a bit stronger, because if you look at the chart itself, so let's put it here, so that's what we might observe, because if you look at the chart itself, we see there is a very strong level of support, of course, which was formed previously and confirmed many times, but we are about to test it again. So looks like this would be the first level to really be preparing to buy as a bottom at 74.34. And the reason for that is that because the company was growing really well from April previous year. You see it made from 40 to 90 all the way. Now, of course, there is let's say reconsideration, even more growth was there. So it's now reconsideration of those levels, and you see there is a big gap between what was happening even in August being at 54.40 and now. So we really need to confirm these levels. So the way to buy here and to enter, of course, therefore would be to wait for this decline further. Most probably it will be coming tomorrow already. So the first channel to buy through will be here between 74.34 and 77.41. So let's write it as a call out. So 74.34 and 77.41. So this will be the first level to buy, hoping still for a rebound within this new forming channel. and then you can just sell at the top of the channel, allow you to make up to 10% profit. And here our classical advice is working, which we say take the profit between 10 to 15%. Really take it there once you can. Re-enter if needed, reconsider your entry, but take it, don't keep it too long, because this would be the channel for first try to rebounds. Then we might continue within this channel, with this declining channel, because we would really need some serious news to pull it back. And if we pierce lower than the 73.34 still on technicality, this would mean that this huge void or huge bust that was formed from 54.40 from August all the way to 74.34, it's quite weak level, and so price could really dip down there, and therefore the next levels to be considered for buying would be here. So this would be around 70.30, and the bottom being about 66.89. So also we can write it here for ourselves, 66.89 and 70.30. So let's make another call out here. So this would be the second level to buy if the price goes even lower, still within, let's say, the technical expectation, the technical decline. This might be happening as the second, let's say, wave on this declining channel. And then actually we should really have a major recovery happening, because, or at least major rebounds, because then R1 line will work as a very strong support. Actually, to be more precise, it will be not R1 line, but it will be both moving average 20 and 50. They will, in this case, will work as resists and attractors, meaning that if the price will be much lower than those two levels, those two SMAs, they will work as an attractor, as attractors. And if the price will be in their vicinity until we have a major rebounds, major recovery, they will work as resist level. So this is just a classical behavior for major declining patterns, and this is going to happen when we will be forming this major recovery. Of course, especially for midterm traders, we can return all the way to around 80s, but for the moment, still too early to say about this. We just need to watch what will be happening now. Also, if you look at MACD, you can see it's a second upwards wave finishing, so most probably will go lower, and this is really well expected. Once we do it, we might have at least two negative waves like we had in March. This means that we could go, if it will be only one wave, to the first channel, if it will be two waves, to the second channel. So this is the most technically expected trade here. And then what we need to keep still in mind is a possibility of negative catalyst kicking in. If it will be putting on top of this situation, of course the price could go really lower, and then we just need to keep some funds. It's not that we say the price will go there, it's just to mitigate risks. We need to keep some funds to buy through these very low principal levels, which will be just meaning that if news comes, bad news comes, or something negativity is there, all these gain from 54.65 to 74 that we were talking about will be cancelled if the news comes, and then we can just buy within 54.65 and 58.70. It's not that we expect this, it's just that we anticipate if negativity comes, this will be the best level to buy through, and to actually to mitigate your risks and to save your money in order to still exit with profit, although spending maybe a little bit more time waiting for it. And this is really the part of our analysis, so-called mixed analysis, where we do 3 in 1. So we do technical analysis, analyzing how to buy through the support resist channels non-linearly, and the third one is where and how to keep some funds to mitigate negative catalysts as a risk. Because once all risks are at least all major risks are mitigated, what remains for you is taking profit. So that's the idea here, and in general that's the main idea and main strategy of choosing and talking about stocks in our opinion videos at Stocks Advisor channel. So with this being said, these are 3 levels to buy through. And if you would be interested in how to buy, how to average down, it's still classical 5-portion play, meaning that the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first channel. Once you have a decline to the second channel, if we have it still technically based, you can buy with another 2 portions through the second channel. And then if there is any negative catalyst coming in and the price really drops, you can buy with remaining 2 portions. This way you don't need to do any stop loss. It's tuned to make a profit, or at least exit with a draw in the really worst case doomsday scenario. So you spend a little bit more days still being daily trader, but you exit with a profit there, so without going to stop loss. So that's the idea, that's the optimization done in this way of trading. So on this being said, good luck with advanced micro devices. Don't forget to subscribe to our channel. If you're first time watching this video, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.